All right, guys, welcome back to another episode of Chart Talk. We can jump right in. Again, very tricky market these past few weeks. Again, markets are at all-time highs. Very, tight channel here. 700's been acting as psychological resistance. In the short term, 675 has been acting as like temporary support. When in reality, this 650 is really like the big line in the sand for this run up basically since May. But this last week or so, markets are pretty much at all-time highs, but we were seeing semi names getting beaten up. We were seeing software names getting destroyed, tech names get some negative price action. And it didn't feel like a market at all-time highs. You're looking at some software names down 20% in a day, and markets 2-3% off all-time highs. It just felt like we were, the market was much weaker than it actually was. We also saw some things from the mega cap names. You had Microsoft down 10% on earnings. You had Amazon also down 10% earnings. So, the midweek last week going into Friday, it did seem like we were going to break this support level and maybe, press lower towards this, major area of support. Again, silver was going crazy, gold was going crazy, Bitcoin was going crazy, everything to the downside, but yet the market was just kind of hovering in this very tight range. And again, on Friday, it's as if nothing really happened. The market snapped back with a vengeance. You had a lot of those software names that were getting destroyed, reversed and moved to the upside. And it seemed like we're back in this happy range for now. Again, Dow touched 50,000 for the first time last week. It's pushing through higher. So we had some kind of, pretty weak price action mid last week, and then we've completely negated it and snapped back even stronger. But again, this 700 level in the SPY is going to be, really the battleground area that we want to see break at some point this week, probably even tomorrow or the following day. So Q is a little bit more of a defined flag we're starting to see here, where the S&P is kind of a little bit more of like this, diagonal channel. But we're seeing, the Qs just, NASDAQ names, tech names, just kind of broadly flagging out, kind of shook out. Again, this is like this key area of support here. But more recently, the last few months, this area has been support. And they got that like shake and move on Thursday, and we've snapped back higher. So much more of a defined like resistance level in the Qs through these highs than, for the S&P 7,000 or 700 is just more of like a round whole number. And again, Dow 30, we've seen this like rotation out of the tech names, the high beta names, and we've seen, the larger cap names, the mid cap names, and more of the defensive, spaces really get the love. Consumer staples, on fire lately. So we're definitely seeing that rotation back into large caps, into like the safer, more defensive names than the higher beta, tech names, so to speak. So again, semis still in this, broad breakout channel. Industrials, again, defensive sector breaking out to new all-time highs, just kind of flag after flag after flag. So great to see industrials breaking out. Materials, again, continue to push through this macro resistance like trend line that we've seen, going back to 2024 and pushing through it again. Defensive sector looks great. Consumer staples, was a big laggard of 2025. It pretty much had like a 5% return year to date for 2025, and then has since kicked off the year, with a vengeance, and has just basically gone vertical, since basically the start of the new year, which again, for sectors, you don't really see this price action very often. But again, this sector flagged out for over a year. And then we finally saw this, very dramatic breakout higher. So again, all defensive sectors have been, getting this love, so to speak. Even energy sector, first time we're seeing new all-time highs in over a decade. Last time we saw highs or higher price action was 2014 in the energy space. So definitely a lot of rotation. A lot of the sectors that have gone, it's like you really have had to have already been in them. These, it's very hard to just perfectly catch these breakouts that take so long, but a lot of strength out there, and kind of shook off, mid caps pushing through all-time highs. But again, the key theme here is really just that reversal action from Friday into this new week compared to that Tuesday, Wednesday, Thursday action. Dramatically different market, but makes it very difficult to find tight entries with names jumping around the way they have been. So few sectors I'm keeping a close eye on that haven't really gotten too extended. Again, healthcare, textbook flag here at this all-time high area. I'm going to go over a couple examples of individual names when they get near these levels and why we focus on them. So healthcare has had a decent run up end of last year to consolidate that move, flagging at all-time highs, very defined risk within this range. So just looking for healthcare names through these highs here versus this 285. So keep an eye on that. And again, biotech's basically the same chart. Biotech's, spent 3 years getting back to all-time highs. Now they're flagging out. And just like we saw with energy, when they get back up here, eventually there is that push higher. So again, this isn't as, energy took a decade plus set up. This is, 3-4 years in the making. So not as macro of a breakout, but still one to keep an eye on, where it's, it's very difficult right now to be looking for longs in consumer staples, after these last 2 months of price action. Same with materials, hard to chase another in, hard to chase industrials. These have already, they're already full steam ahead where you need to have already been in, but it's hard to get in now where the healthcare and the biotechs are still setting up for that potential break down the road. Even utilities, nice little consolidation. They've been somewhat off the radar for the past few months as they pulled in, started to base out, inside weeks still. Again, it's only really Monday, but can definitely keep an eye on the lower beta sector for that breakthrough, that 190. So on my end, really, I've been very light this year trading wise. The one decent swing I've taken lately that I'm still in is Gilead. Again, we're talking about all-time high breakouts. I'm going to just zoom out a bit. We're talking about that 10-year breakout in energy. Gilead is another perfect, very good example of this. Took Gilead, 10 plus years to get back to all-time highs. We bought it as it started to break through those all-time highs. And, what's taken, this name, months to break out higher or break out, a 20% move. We got that with relative ease once it was able to clear all-time highs. Just the path of least resistance was higher. Now this name does have earnings tomorrow. So a rule that I try to stick by is I'm going to hold the name through earnings. I want to be up at least 20% in the name to give me that cushion. If somehow GILD, craps the bed tomorrow and gaps down, I can weather, a 20% gap down and I'll be back at break even. So took some profits today for on, 18, 19% in Gilead. Again, we bought it. It's just done nothing but trade higher. That's what we expect or aim for when we buy these blue sky breakouts. So we'll see what happens with earnings tomorrow. If it gaps up, it'll still be a hold. If it gaps down, again, it'll still be a hold. It's not like this thing gaps up tomorrow, I'm going to want to immediately sell it. I want to still stick with that winner. And if it gaps down, then it's looking for an exit before it gets back to our price. Now, Amazon, had a big gap down on earnings. Microsoft as well, both, some mega cap names with 10% gap downs. Again, Microsoft gap down and then inside day and lower since it's reported. Again, very clear breakdown channel or stage 4 breakdown in Microsoft. So if you're not in it, continue to avoid it. This is the easy time. This breakout stage, you have the topping pattern, and you have the break of support and the start of the breakdown stage. So for right now, Microsoft is one that's like very much off the radar while it's in this breakdown stage. And for Amazon, again, similar gap down. The only difference was with Microsoft, the day it gaps down really didn't catch, much of a bid. Kind of, pushed even lower all day, bounced back a little bit, but hear my dog barking. It's weekly time for him to bark. So again, Microsoft was in a void on the day of earnings, while Amazon was showing a little different from from a price action standpoint. So Amazon gaps down 10% like Microsoft did. Difference though was the buyers, pretty much came in off the open and were supporting 200. So we took a trade in it through that 205. Again, I'll show like a 15-minute chart just to show. So again, it wasn't like we were blindly chasing this off the open. Gaps down huge. 15-minute bar gets put in. We can see 200 is the low. And we were looking for an entry through the high a day, which at the time was 205. So we got that entry, for most of the day, had a nice little run up to like 211, $6 in our favor. Got nowhere near where the out was of 200. But again, this is a very like contra trend trade. This thing just gapped down 10%. This thing was down almost 20% in about a week. We're clearly not on, the majority, in this Amazon. So we want to really see, a decent close in the name. Kind of got it, but it wasn't really the best reason to hold this name from 205. Again, today, kind of pushed through highs, kind of pushes below what our entry price was. So we took a little gain on that on Friday, but wasn't really like the defining reason to hold this, given where our entry was relative to, where the name was closing. So took a little shot in it, but not really our favorite setup. This triple R, one of our big picture alerts through 64, still pushing through nicely, just kind of getting started. That stop still seems to be the case versus this like 62 area. CAH was another one, it's blue sky breakout that triggered on Thursday through that 216. Again, for now, you pretty much keep that stop, kind of break even. But it's been very light on the trading side. On my end, it's been holding Gilead. Last week took a trade in Amazon, not doing too much when the conviction isn't really there. I'm not forced to trade every single day. If there's setups that are out there, great. If there isn't, that's part of the market too. So, last week was a little bit choppy, even though this was a very insignificant drop overall, but there's just not that many actionable setups at the present time, which again, a few positive days of price action can change that pretty quickly. So some key names that are still setting up, again, this NVIDIA, nice flag here. Again, this key area support was really defended on Thursday. Again, if this area broke, this 170 broke, and this was going to be the start of a topping pattern, could have really pushed, the S&P lower, but buyers definitely defended this area, and sellers are still holding this 195 down to a T. So NVIDIA just continues to flag out, and either buyers going to push through 195 or sellers going to push through 170, and anything in between has kind of just been a little choppy. Now, Apple, kind of a similar chart, just in this broader flag here. Again, buyers have been defending this 245 area. Sellers have been holding this 280 area down. So just like NVIDIA, Apple is just in this, kind of broader flag, so to speak. So, when you have Apple, that's a large weighting of the S&P, you have NASDAQ, an 8% weighting of the S&P, two of these names holding up, 10% plus of the S&P in this, relatively tight range of a flag. When there's a lot of other weaker names, like these are reasons why the whole index still looked very strong last week when a lot of names didn't look that good. You have a large weighting of these names that are just kind of flagging out, kind of holding the market up. For gold, again, getting a little bit of a dead cat bounce here, just kind of like what we saw a few months ago. The new range in this gold is $800 an ounce of a range, dead smack in the middle. Not much to there, in my opinion. Again, silver, it does seem like the silver trade is kind of over. Again, 110's the high, 70 has been, so 65, 70 area has been recent support, but this is just going to be the chop, the very difficult time to be in the name. This was, again, from 50 to 100 was the easy time. After you have this big 30, 40% drop, this is the chop. This is, the very difficult price action. This is stuff that if this was a stock, Again, we don't really trade precious metals, but not the environment you want to be involved after kind of these blow off tops and breakdowns. Tesla, another name just flagging out very broadly here. Again, this breakout through this 480, 500 on the road looks amazing. It's been setting up for over a year now. So we have all-time high. We have the retest. You can kind of see these areas are kind of retest. So call that a retest. And then you got like 30 times the charm here. Not ready yet, but just flagging out here. And eventually through this 480, very easily, 100-point higher when you get a real break of this 480/500 area. Moving on, again, SMCI has been trying to kind of break out of this little downtrend down here. Earnings again out of the way. Tricky part though is it's still very wide. So I'm going to get rid of it. Just this is the base that SMCI is in. So eventually we'll see a break through this 35. Call it even 36. But it's still, you're buying 35, buying 36 versus 31. You're giving this thing $5. You got to really hold it, back into the 50s for that risk reward to make any bit of sense. So definitely looks good. It does seem for now, just waiting for 36 to really develop and tighten up. Seems to be the move. But for now, definitely one to keep on the radar. Again, this AS almost triggered today, would not have been chasing it third day up into resistance when it's up, 6% in the day. But this 40 breakout has been one we've been keeping a close eye on. So, earnings are coming up in about 2 weeks. We'll see if it's going to push through tomorrow. But again, this is not a name where I'm going to chase it fourth day up because it's hitting this level. If it flags out, pulls back in and tightens up, absolutely. But just blindly chasing it, you kind of get moves like this. You got to push through and you get that kind of fade back in. So keep an eye on it. But again, not chasing any names, especially with how, hot and cold the market has been. Again, a lot of the credit card companies still just, setting up. It doesn't seem that Trump's announcement really killed a lot of these names, just, minor pullback. But, American Express, Visa, MasterCard, all just kind of in their relative ranges. Nothing really, out of the blue there. UNH, big gap down on earnings. Again, still an avoid. Big base forming here, 120 plus range. But it does seem that UNH is heading closer to 52-week lows before there's any push back to highs. So, another big avoid here. Again, Hood, like Microsoft, very clear stage 4 breakdown, very much an avoid for the time being. We do not want to be buying names in stage 4 breakdowns. It's very easy to just find stronger names that are in breakout stages than trying to catch the bottom in the weaker names. The CYTK still flagging out. Keep a close eye on that 66 level. For 60, again, still 10% range, still, pretty wide. But, definitely want to keep an eye on that breakout level. This wing, again, big base that's been forming. Trying to push through this, 280, 285 area versus 260. Very nice base here. Eventually should see a move back to these 380, pivot highs. So keep an eye on that. Again, Meta, fades from, the gap on earnings, fades back into this recent range. And we should eventually see, we started to see this little push through today, but a lot of times these patterns, when they, pull back in on earnings, tend to kind of fade a bit more than we expect. So let this continue to set back up. Definitely could keep an eye on this 680, but it's not, something you're dying to buy, tomorrow, for example. Merck, big shouts out to Chad for calling out this Merck through that 108 area. Again, healthcare names have been very strong, just like Gilead, it's Merck, 7-8 days up in a row. Little, sell off today, but not the biggest deal relative to the run it's been on since his call out through 108. Again, this NBIS is one to keep on the radar through this 100. It does have earnings coming up on Thursday, so just wait until after that reports. Again, Netflix, just continuous reminder of why we avoid stock splits. Netflix has not seen any price action higher than they announced that stock split. Also, just recently broke macro support, starting to act as resistance. So Netflix still seems to be pretty big avoid going into 2026. The chef tickled this 68 area today. Expect this to kind of pull in, form a nice higher pivot low. Again, it's a blue sky breakout, so we'll let this pull back in, set back up for that 68 breakout through all-time highs. This LPLA, again, financial names have been somewhat decent lately, and we can see this 400 breakout again through all-time highs. And we're going to go over a couple examples in a moment of why we really like these setups. Again, still a little wide, 10% plus range, just from this is what Thursday's low to today's close, 10% swing. So again, when everything's super strong, market's up, it's hard to be putting on risk at these levels in some of these names, because you get one or two down days and you see the realistic downside. Like in this name, you bought a Thursday, you're down 10%, you're back to even. Those are big swings that you don't really want to be, again, too chopped up in. Again, just some reminders of why we want to buy through all-time highs. This GLW was a big picture alert back in August. Nice little earnings flag, and it looks so small given the run that it's been on, but very textbook flag. Alert through 66, never trades below 66 after the alert, and 6 months later, name's trading 100% higher. So just good reminder of, you can definitely find tight risk setups and get these extreme returns on investment, but it does take time. This 100% return took, call it, half a year. Doesn't happen overnight. So when you do find those winners and they do continue to grind up higher day after day, as eager as we are to want to sell them, these are when we want to find proper pivots and hold those winners as long as we can. So another good example of that, again, just trying to highlight these blue sky breakouts. This light has been on fire this year. I would not be touching this with 10-foot pole at the current prices it's been at, but this light could not break above 100 for 5 years since 2020. Every time light got up to 100, it would sell off, couldn't break it, for many, many years. The day it breaks 100, 2 months later, $500 higher. So this is why we're talking about LPLA through 400 or Chef through 67. These names feel expensive at the present moment, but if we go back and we bought light the day that it became the most expensive through $100 a share, this is 10% risk. And if you were able to, have the patience of a monk and sit through this insane percentage increase, this is, your decades worth trade in a few months. But you have to just be able to spot these macro patterns. And that's like what we're seeing with Gilead. We're seeing very similar price action, decade plus setup, finally is getting that run up. Took some profits into earnings. Again, these trades take many, many months. This thing can gap down tomorrow, come back to 120 and still be totally fine. So you still have to lighten the load a little bit on the way up. But when you do catch some of these big winners, they really can make, your week, month, or year. So another one finishing up here is this STX base break through 100. Again, tested the level today. We'll see if it gets some continuation. Again, does have earnings on Friday. So I'll be waiting after earnings to see if it pulls back in and sets back up. So again, if you've felt a little bit flat-footed in the market lately, again, this has definitely been a very tricky environment these last, month or so. where these little pullbacks, these little 2 or 3% pullbacks have felt much more painful than how they appear to be, mainly because you have some of the mega cap names that encompass so much of the market. With these names just flagging out, they're going to hold up a significant portion of the index, while some of the small names or less, popular names can get really banged up. And that's where, from a swing trading standpoint, you have to just know when there's time to press it and when there's time to pause. On my end, again, I've been very, light, very narrowly focused. Gilead and Amazon are probably my two main trades for the last few weeks. So, being able to sit in cash and wait for the right times, nothing wrong with that. So, hope this was helpful. And any questions or comments you have, post them below. I'm glad to help you out.